ladies and gentlemen, boys and girls, cats and kittens. Welcome back to the podcast, the live stream edition, and thank you. Ladies and gentlemen, boys and girls, cats and kittens, welcome back to the podcast, and thank you. This is for all of you. You guys are all survivors. Just thought I'd point that out. The podcast is your home for rational crypto news and objectivity, leaving emotion at the door and talking about what we like, why we like it, and where we see it going. We are not off. I'm taking it out. I keep saying I'm going to take it out of the monologue, and I keep forgetting. We are telling you what we do, and that is all. That's what we do here at the Podcasts. I already jammed it up, man. We don't slow down. We don't let up. Full speed is our only speed. I am your host, Scott, pragmatic investor who has won and lost fortunes. And joining me right now is nobody because Bell is out fiat farming. We had to make some transitions. We're doing our best trying to keep the show going. Here at the podcast, we have a tendency to talk about what others are not talking about, bringing the focus onto use case cryptos because, as we know, these are what drive the market and bring innovation to a world that desperately needs it. The status quo is no longer acceptable, and it's time for a technological revolution. Welcome to crypto. Welcome to the podcast, and thank you. So, as we've done on this show for a very long time, I don't script my monologues. I just kind of roll with it, and whatever I'm thinking about at the moment, that's going to be what's coming out. And I don't know if you know this about me and Bell, but we used to do political commentary for a long, long time. Now, one of the kickers when you're doing political commentary is that you spend your time looking for the things that they're not saying, because that tends to be the truth. We go digging down and we apply Occam's razor and we see where we end up. So I've been thinking about this FTX thing just more and more, and Sam and all of this goodness. And by the way, they filed bankruptcy. That's everything having to do with FTX, and there are just tons and tons of subsidiaries in there. They're all filing bankruptcy. And I saw the Twitter thing because Sam said he's sorry again, but it gets me looking because just call me a naturally paranoid kind of person when it comes to my money. But I want to know what you're not saying. I want to know what you know that nobody else knows, because that's where I'm going to find the value. So got me thinking about all this. And not for long. I've been plumbing this for a couple hours, so I don't have my notes in front of me or anything like that. But when you see a big crash like this, when you see a big black swan event like this, my natural paranoia kicks in, and it makes me ask the question, who benefits from this? And I understand right now, very emotional time. This is usually when the most damage can be done and the most gain can be had, is during emotional times like this. So it really got me thinking about this one, and I keep hearkening back to three simple words: mortgage-backed securities. Now, I understand one has absolutely nothing to do with crypto. I get it. All right, mortgage-backed securities, legacy world, something that they just dreamt up so that they could tranche together a whole bunch of bad debt, sell it as good debt, and everybody make a whole bunch of money. So clearly, that has absolutely nothing to do with FTX, which took a whole bunch of money, wrapped it up, had it basically be uncollateralized, and then used it as they saw fit. So when I started putting those two and two together, it got me thinking a little bit more about Sam, brilliant Sam, the savior of crypto. Look what he did. Look what he can do. He changed the game. He made it to where it's beautiful, fresh, and unique, and nobody can ever do this. But what he actually did was what has actually happened. This is not new. This is not brand new. This is not isolated to crypto. Financial folks have been doing this forever and ever and ever. Now, here is the great big difference, and the reason that this one could plummet and other things didn't. Banks, legacy world financial products. See, what they have is a friendly government that's going to work with them. And the big difference here between legacy in crypto is that if you have the backing of the government never runs out of money. Government can always hit print. Government can always make more show up to shore up these investments, to stretch them out longer and longer and longer. We were getting warning signs about mortgage-backed securities way back in 2006, 2 years before the actual crumbling of it. But the warning signs were there. People were throwing the flag. People were just going nuts. But because everybody was interested in it, because everybody was making so much money on it, we were allowing it to continue. And then when the worst should happen, government hits print, everything's made whole, and a year later we forgot that it ever happened. Legacy Financial has a goldfish memory as well. I just want to make sure that you guys are aware of that or where my thoughts are going on this. But it did tail back to Sam and his, I don't know, man. People, the tabloids are almost picking this apart. Lived with 10 people. They were all sexually involved with each other. Lived in a big ass mansion down in the Bahamas, and that's it. So they took this, they built a $20 billion empire, and here we are. But it's interesting to me that these same people who really do not have that kind of financial savvy, meaning that they've grown up in this, because it usually takes you 30, 40 years to learn how to game the system. It just makes me a little bit curious. It makes me curious about who else was involved in something like this. They're more than happy to let this kid take the fall. They have no problem with this kid taking the fall. I just saw a thing right now. His net worth is zero. Everything gone, just like that. But are you asking me to believe that these 10 people built this with no real deep knowledge of the inner workings of traditional legacy finance? Because effectively every tool that they were using, everything that they were doing has already been done. So either they are great at studying or they had help. That's where I get really, really curious, is who was helping them, because this is never going to come out. The people who are behind something like this are well insulated. They have absolutely nothing tying them to it. But call me paranoid, but something tells me that there was a large group conglomeration of money men that were helping this happen, because look how profitable it is. Look at all the money that we can make. Look what we can do. We can create vapor. We can sell it. We can tranche it. And there you go. So the fallout of this is not going to be felt for a time. We're still working on it. And I know BlockFi is on the chopping block, and we're going to be getting to them. But I want you to put on your tinfoil and take a look at this entire situation, and figure out answer this one question. Who will benefit most from this? Who is going to benefit the most? Not tomorrow. Not short term, not trades, not Bitcoin. Oh my God, look at this. The sky is falling. None of that. Who is going to benefit from this long term? You get to that. None. You figure it out. I think I know. And I got an article telling you, I think it's going to give a little bit of clarity to where I think is going to benefit from it. But you figure that out, and you're going to start to figure out the rest of it. Now, the amazing thing right now, it was a good thing. All right, I'm glad. I hate the losses. That sucks. I hate the people who got wiped out on this. But you know what? You're kind of an adult. You can make your own decisions here. I feel bad about that, but it actually was a good thing. You know, could you imagine the debt that they were carrying, the shell game that they were carrying? Could you imagine that going into a bull market? Could you imagine that expanding 10 times, 50 times, 100 times? Could you imagine the calamity when it's not 18 billion but 180 billion? Could you imagine what would happen as this continues to work, as this Ponzi scheme continues to work, and more and more and more people climb onto it? Because the one thing that you can always be sure of in finance is that if there's money to be made, there are people lining up to make that money, to get in on the game. They want that action. So take this, magnify it by about 100 if this would have carried on, and there you go. So we have a few good things to get to today, in my opinion. A lot of this reinforces what I've been saying for a good long time right now, so I feel somewhat validated. We're going to be talking about the CPI, the effect on the stock market, because again, if you don't think it matters, it absolutely matters. And the only thing that kept Bitcoin from being about $24,000 today, right now, was FTX. That was the only thing that was keeping that down, because it would have just absolutely boomed. So again, probably a good thing that it happened. Okay. Anyway, guys, that's the whole monologue. Give me 60 seconds. I got to brush through this. I got to take one little text message here. We're going to come back. We're going to get to the stories. We will get to the money. We will get to all of it. Thank you for joining me pretty much all week here on the podcast. I hope we're giving you good value, and we will be right back. Sorry about that, guys. I see my graphics hanging up. I have got, Bell, if you're listening, just make me buy a new system. All right. We have too many windows open. We have too much going on. And I need to upgrade, but for some reason, it's just a lot easier for me to buy a pink shirt than it is for me to buy, throw $3,000 into a system that'll actually handle the show as the show continues to evolve. So we got a new frame, guys. Again, this is still rough. We haven't done news format in a while, so I hope today is better than yesterday, but I don't know. We did get a new frame set up, so we're going to go ahead and start chomping into this, because as I said, I like to know who benefits most from this. So I'm going to start with an article that I pulled from Cointelegraph here, and I'm surprised. I wish this would get more attention. U.S. senators commit to advancing crypto bill despite FTX collapse. That's weird. That's odd to me. It's odd that they would word it like that. 2 U.S. senators said the downfall of FTX clearly exemplified, quotes, the need for greater federal oversight of the digital asset industry. Now, I want you to hear the rest of this, because it starts to flesh out a little bit. United States Senators Debbie Stabenow and John Boozman have doubled down on their commitment. I want to make sure that I'm going out. Their commitment to publishing a final version of the Digital Commodities Consumer Protection Act 2022 in the wake of FTX's shocking collapse. For a short time, the cryptocurrency community wasn't sure how the senators would respond to the FTX crisis, as the DCCPA, I love acronyms, by the way, the DCCPA bill is understood to have been strongly supported by FTX CEO Sam Bankman. Now, I want you to ask yourself a question right here. I want you to ask yourself a little question. Did Sam really think, if he was completely in the know of everything that his companies were doing, that he was signing his name to, if he knew all of these things, do you think he would actively be supporting legislation that would effectively disclose all of this information, all of the dealings that they do, all of the money that they're moving back and forth, the way that they are handling investors' money? Do you honestly think that man would stand up and say, you know what, we need it. Government, come in. Here's our lounge, and here's all of my books. Anyway, that is the paranoia overcoming me, and I'll continue. Now, here's the funny part. But the members of the U.S. Senate Committee on Agriculture, Nutrition, and Forestry, these are the 3 senators, all right? These are the people that are leading the charge. This is the department we're going to get them. We're going to get these damn crypto people. Agriculture, Nutrition, and Forestry. That's where it landed. That's where it ended up. Confirmed their intentions in a November 10th statement stating, quote, the events that have transpired this week reinforce the clear need for greater federal oversight of the digital asset industry. Bankman-Fried is understood to be a strong supporter of the crypto bill. And considering his credibility right this second, that's what you want in your article. That is where you want that headline, because it is amazing when it comes down to things like this, how people can tiptoe through the raindrops. The man just defrauded. I think he's just a puppet, but that company, FTX right there, just defrauded people of billions of dollars. Billions. But when it comes to regulating the industry, suddenly he's the industry standard. I love this. This is why I don't do politics anymore. But it's fun that it came around to crypto, so I could actually do this. This is wonderful. Bankman-Fried is understood to be a strong supporter of the crypto bill. He has attended several Senate hearings and published a recent post titled "Possible Digital Asset Industry Standards" on October 19th. So, our Judas right now, the man who brought it all down, the man who set everything in motion, the man who hit the first domino so the next could collapse and the next could collapse and the next, is so concerned about what he's doing that he's attending Senate meetings. He's inviting them to take a look at his books. He gave over $200 million to campaigns. I didn't look into it. I don't care. Doesn't matter, man. Your money, you earned. Oh, hey, let me back that up. I was about to say you earned it. All right, you didn't earn it. You stole it, sir. Let's be honest. If we're gonna be, now's the time. Now's the time for honesty. Let's just get it all out. You did everything wrong. I mean, everything that you could possibly do wrong, you absolutely did it. But something tells me he's still going to be attending Senate hearings, and he's going to be the voice of reason. He will be the industry expert. He will be the guy that they're all going to defer to. Well, listen to Sam. Look what he built before it absolutely collapsed. You bet we should listen to him because he knows where all the bodies are buried. He doesn't know where all the bodies were buried. He was enjoying his wealth. The checks came, and he signed his name where doesn't matter. Okay, we're going to take it up. So, who benefits? Who benefits from this the most? This is kind of where we go, where my mind goes. And again, this is why I don't do politics anymore. Money's just more fun. All right, crypto is more fun because not the way people do crypto, the way I do crypto. I just have more fun with it. I can break it down to math. I can break it all the way down to simple dollars and cents, and that works for me. So that's one of them I really wanted to cover. And I could do the whole show on this alone, man. But I am absolutely going to put people to sleep. That's not my intent. So there you go, guys. That's kind of where I'm going on this one. But there's more. There is always more. So FTX. It's all going to be FTX, man. Shocked and dismayed. Down goes the BlockFi. Crypto lender BlockFi is halting client withdrawals and limiting activity on its platform, caught up in the fallout from the implosion of crypto exchange FTX. BlockFi blamed the uncertainty about what's happening in Sam Bankman-Fried's empire, the exchange, its U.S.-based counterpart and trading firm, Alameda Research. Let me bottom line this one for you real quick. They're bankrupt. All right, it's gone. There's no bailout. Nobody's coming. I understand that he's talking to the guy from Tron. I understand Tron is, we got billions for it. It's not going to happen. All right, this is going to go because it's necessary for it to go. Anybody, all the different names that are behind this, what's happening right here, they want this to go quickly and quietly as much as they can. With the business that we do today, it's all handled on Twitter. So they want this to just be put to bed. There's no bailout coming. Nobody's coming. There's no rescue package is not on its way. This thing is gone. Somebody might be able to scare up enough money to make some of the investors here whole, but yeah, no, this is it. This is done. They want it to go away. But coming back, we are shocked and dismayed by the news regarding FTX and Alameda. That's what they tweeted out Thursday. This is where business is handled. And I got to ask BlockFi, are you guys going the direction of Sequoia Capital? You did full due diligence, but you didn't pick up on some of the anomalies here. You didn't see any of that stuff. I'd have to kind of ask, when you do your due diligence, do you just call them up? Hey, are you guys ducky? They're ducky. It's all right, guys. They're ducky. They said they're good. So let's just go ahead and put all of our all of our loose money. Let's do to our investors what they're doing to their investors, but they're a much bigger pool. So let's just push it over there. It'll alleviate our risk. How's that working out for you? How's that working out for you, BlockFi? Given the lack of clarity on the status of FTX.com, FTX US and Alameda, we are not able to operate business as usual it added, saying its priority is to protect its customers and their interests. The New Jersey-based crypto lender called on clients not to deposit funds to their BlockFi wallets or interest accounts. Taking the big screen back here. I got to ask you again, BlockFi. All right, if you guys are on the straight up and up, if you guys are holding reserves of 1-to-1 of what your investors are giving you, why should what's happening at FTX matter at all? If you guys are running your own business, why should the demise of FTX affect you at all? If you did your due diligence before you shoved the money that your investors gave to you to hold in trust, and you said, let's see what we can turn this into on our own. If you weren't doing any of that, why would FTX matter? Why would the demise of FTX matter to BlockFi at all? And why are you blaming them? I do got to ask, and this is a personal one for me. Why are you trying to pivot this over onto FTX? Because that's what you're doing, all right? You're shifting responsibility. Right now, he's in the crosshairs, the line of fire, the demon. So you're just piling on top of him. That's all you're doing. Well, it's not us. Wasn't us. It wasn't BlockFi. We're on the up and up. It was FTX. That's where you need to direct your ire. If anybody's ever been involved in these, and I've been personally involved in a few of these right now, it's a crowd psychosis. And when bad things happen, you will look for any enemy, anybody. It doesn't matter. This goes back to Saul Alinsky. And if you've never read Rules for Radicals, do yourself a favor and read Rules for Radicals. You personalize it. You isolate. That's what you do. And poor Sam is over here isolated and alone. You personalize it. Then you pile on. BlockFi, you screwed up, not FTX. You took your investors' confidence and you stomped all over it, not FTX. All you did was try to do what they are already doing, but you did it through them. You didn't even trust yourself well enough to set up your own damn Ponzi so that you could take their money that they give you, make it more money, but you're going to have it back in their accounts before they want it. This is what it comes down to, guys. This is FTX. This is BlockFi. This is going to be whoever is next. Is you took their money because as soon as it hits the account, it's your money now. You took it, decided we're going to make more for it. Look at what everybody else is doing. We're going to pile on. We're going to get some for ourselves, and we're going to make sure that it's back in the accounts of our customers before they want it. And then something bad happens. And you didn't plan for it. You know why? Because nothing bad happens, right? Ever. There are no black swan events. There is no 2008 crash, 2009, 2010. There are none of these. You guys are experienced money handlers. You know your way around the business. You know how to manipulate this. But for some reason, as soon as something wobbles, the dominoes all fall. Got to ask, man, why don't you do the right thing? BlockFi, do the right thing. Go to Twitter. Because, again, this is where business is done. And just admit, we did not handle your funds well. You should not do business with us. We clearly cannot be trusted with your money. Because look at what we did. It wasn't even our own fault. It was FTX's. But we're so shit-ass stupid that we could not back it up ourselves. We don't know what we're doing. We're doing what they're doing. Do the right thing. I'm just saying, do the right thing. Come out, admit it. You kind of did when you said stop withdrawing or stop depositing to our accounts because we suck. That's a good one. You kind of did the right thing. But why don't you now just come out and do all the right thing? We're criminals. We took a spin on the roulette table. It didn't come up. We're sorry. This is that. Just do the Sam thing. All right. Just put a tweet. Oh, I'm sorry. You know, I thought I was doing the right thing and it all went south, but I'm sorry. Try that. You know, it worked for Enron. And the goldfish memory of the entire human species. Do you guys remember all the oil that was flowing out of the big hole in the earth? From Enron, you guys remember this? Have we forgotten this completely? You remember BP? Remember BP's oil spill? Remember what they did? Enron did it. BP did it. Everybody's done it. But do you guys remember? Oh God, what the hell is his name? What the hell is his name? The CEO of BP at the time. Oh, I forget. You know what his apology was? We're sorry. We're sorry. This is what we get over and over and over, and people forget. So don't worry, man. It's not BlockFi's fault. It is it's FTX's fault. That's all that it has to do. That's all you need to know. All right, it wasn't their fault. It was always somebody else's. I have such a good time with this. So I don't want to just sit here and bash the hell out of these guys needlessly, because I think I've said what I said, and I think you get the point. But I do want to illustrate this as a lost opportunity, and that is going to go to the next article that I would like to talk about, because a lot of this goes to everything that I've been saying and doing pretty much all week, for 6 months. I was waiting for this moment. I was waiting for this very moment yesterday that happened. You know what? I'm going to get to this one, guys. Let me take 60 seconds here and hope my graphics work. So let me take a short break. I want to look through the comments, and this is the best I can do. All right? Until Bell's back on the show, this is the best I can do. Appreciate you guys joining me, but let me look through. Going to be right back, and we will get to an actual bit of good news. I like good news, too. Then we'll do some money. Appreciate it. Yay, the graphics worked that time. I feel better. I got to ask again, guys, do we like the new format, or do you just want me to go back to chasing the lights, cuz I'm kind of fine with either of them. But if I'm going to continue down this path, I just need to know this is what you guys would like me to do. The channel's not monetized. All right, we none of the videos are monetized. We work for tips, but the whole thing has been not demonetized, meaning I don't put up monetized videos anymore. Everything's open. I don't like commercials. I don't think you guys should have to deal with them. And honestly, we don't get enough views to really make it worth it. So it's pretty much a family show here. But because of that, I want to make sure that I'm bringing it to you in the manner that you guys would like to see. So we're going to get into, and the comments are below, and I'd appreciate, I want some feedback. That's what I'm asking for here. All right, we're going to be getting into one more article, and this one is just, again, this one just kills me. Not because it's wrong. It's not. All right, it's dead on. It's the way I saw it. It's the way that I have been pushing my investments for a good long while now. Was for this very moment, was for yesterday, because I, again, like to take a 30,000-foot view of investing, not crypto, but of investing as a whole. That includes market sentiment, that includes inflation, that includes spending, that includes everything, all the stuff that's going on in the world that we like to pretend doesn't happen because we're in crypto, but it absolutely affects us directly and hard because we're in crypto. So yesterday was supposed to hands down just be my victory dance, and it didn't happen because of that damn Sam at FTX. But at least it was mentioned. So we're pulling this one from Markets Insider. On Thursday, the CME FedWatch tool showed roughly an 80% probability for a half-point hike, up from 58% earlier this week. Now, I'm starting with that little portion right there because everything that I've been doing has been basing it on a declining CPI. And yesterday, I absolutely got my wish, and a lot of good stuff happened. The stock market just had its best day of the year. We can chalk that up to the Thursday morning inflation data that showed prices cooled faster than expected in October. I'm not one to celebrate. He wrote this one kind of as it's up and down. I'm not one to celebrate prices being 7.7% higher than a year ago, but it's certainly better than the 8.2% inflation we saw in September. Now, this guys, comes back to market sentiment. I know you hear me talk about that a lot, and I'm not going to stop because everything has got to apply when you're assigning intrinsic values to your investments, and that includes market sentiment. I was waiting for this. I was absolutely waiting for this moment. It turns out those Feds interest rate hikes might just be working at least a little bit, and investors are celebrating. The NASDAQ saw more than a 6% gain. The S&P 500 climbed more than 4.6%, and the Dow jumped over 3%. Meanwhile, this is a biggie, and I don't know if Mad Crypto Dad is on the stream or not, but he and I talk about this all the time, and we're both kind of pragmatists, so it works out, and we have good discussions. But the thing that I was looking for, the thing that was really keeping a lot of money in my very, very stable stuff, is the 10-year Treasury. It was a big deal. I was concerned. He was concerned. We've had a lot of discussions, but meanwhile, the yield on the 10-year Treasury, which has been flashing recession signals in recent months, plunged after the morning's inflation report. Now, for Mad Crypto Dad, if you are watching, you got my answer, babe. All right, we've had this discussion. You know where I am on this, and I was waiting for it. I know you were. So although we were both pragmatists, I'm pretty sure you have to be lit up just a little bit. I was. It's not stupid pragmatism, all right? It's not blind pragmatism, but I will take into consideration all aspects of the market, and the 10-year Treasury was definitely, the yield was definitely one that I was keeping an eye on. That didn't surprise J.P. Morgan, as the firm's analysts earlier this year had projected a rally in markets and an easing of bond yields following a cool inflation report. That's not exactly crystal ball kind of stuff, all right? Anybody who is familiar with this or in this market at all, this is what we were all looking for, all right? It's not that you guys are pointing out the obvious. It's that we've been talking about this for months and months and months. The question is, how did you invest on this? Because if you waited for it to hit and all of a sudden everything up there went up, that's great, but you're now buying overvalued FOMO type of assets because you weren't invested correctly before. So I'd ask the people at JP Morgan, how are you guys investing? Were you just hoping, or did you have a pretty good idea this was going to happen? With CPI posting a fairly meaningful decline, and it was, the likelihood the Federal Reserve eases the pace of its rate hikes has climbed. The Fed made 4 consecutive 75 basis points, 0.75% point hikes, but now traders are pricing in higher odds of a 50 basis point move in December. Now, I've been, this has kind of been the thing that I've been waiting for, honestly, and everything that I've been doing as far as investments, and you guys see my wallets, I got nothing to hide, has been leading up to that very moment, has been leading up to yesterday, has been leading up to that report coming out and exceeding expectations. I just needed 1 month. That's all we needed, was 1 month. Because when you exceed those, when you miss those expectations, when it's too high, if it went from 8.1 to 8, none of this would have happened. All right, none of this would have happened. Powell would have just been in a tizzy, even though I don't think it doesn't matter. Powell would have lost it. The Feds would have tightened. Everybody would have been behind him saying, we got to go harder. That's what would have happened. But that's not what did happen. What did happen was a better than expected report. This is 3 months in a row of declining inflation. It's not to say, again, that we can't pretend that it's not still above 7%. That is shocking. But I'm not talking about actual reality. I'm talking about perceived reality. That's market sentiment. And that market sentiment led to the Dow climbing over 1,200 points in a single day. We could track that with the Bitcoin chart. That was great because you saw those two nice little things that were just kind of shooting off. And had FTX not happened, Bitcoin would have been sitting at $23,000, $24,000 per token. Right now, everything would have been up. We would have all been partying. But it didn't. So we can't really look back. We can't really unring that bell. It happened. We're there. We're stuck with it. So, we just kind of have to deal with it. And the way I deal with it is through the way that I invest. So why don't we pivot here just a little bit, unless I have any questions. Makota, new format, good. Yeah, do this for a while, see how it goes. Damon, indeed, I need to calm down. I just get too hyped making these rewards. Hey, Scott. from ZK Frost. Hey, Scott, is farming with stablecoin pairs worth the risk? Using that 10 to 20% APR to invest in more volatile pools. I'm going to take that one because that's a good money question, and I do an awful lot of this. I'm going to pair up, and we'll go to third screen here. And by the way, guys, that's the only wallet I'm going to show now. I am getting entirely too many questions and people being overly concerned about what is in my wallets and what I do and where's my money coming from and yeah. And instead of explaining that over and over and over, we're going to do something right now. And Zeke, I'm getting to your question, Zeke. This is where this is it. This is what we're going to do now. This is it. You'll see this. We're going to grow them together. I'll show you all the moves. I'll show you what I do specifically with each and every dollar that comes out of here. We will all observe it. And after that, then if you have any questions, I can just tell you, go back and watch the videos. But do I go after stable tokens? Do I pair with stable tokens? And that's perfect. I think we hit the epoch. Let me see if I got any money to work with here, guys. Let me hit the refresh. Do I have any, do I pair with stable tokens? I absolutely pair with stable tokens, and I'll pair with stable tokens anytime I can, anytime I possibly can. There's a couple reasons. One, when you're pairing up with a stable token, now your impermanent loss is going to be, your risk of IL is going to be higher. It has to be. It absolutely has to be, because these are assets that do not move together. They don't. But if you look at the crash that happened over the last couple of days, Atom and Osmo decreased in value evenly. It was an even by percentage. It was they run together. So when you're in tokens that they run together, your impermanent loss risk is going to be smaller. This is just math. If they're both going up, both going down, then one side of the pool is not being pulled out to support the other side of the pool, so your impermanent loss risk is much lower. But you're also exposing yourself to double the losses. So, for example, this pool right here, which you can see is USDC and Osmo, this is the single biggest pool on every wallet that I have, is USDC, Osmo, and I'm not going to change my mind on this, because although Osmo took a hit, USDC didn't. So I'm only actually exposed to half the risk on this, plus a little extra for the impermanent loss. So we can't just dismiss that. I know we don't talk about IL on here a lot. The math sucks, all right? It does. And I know people poo-poo it. Well, it doesn't really matter. It's just a small percentage, man. But small percentages over time turn into big numbers. So I'm never going to just completely dismiss it. I'm not going to say impermanent loss is not an issue, because I believe it is. But on this particular pool, I'm only exposed to half the risk. I'm only exposed to half the risk on this one, because the only token that went up and down in value was Osmosis. So big fan. Now, I would do this with half that APR. I would do it with a third of that APR. I would still be in here. These are rock hard places, pools for me. This is what I do. This is where I put my money. I don't gain as fast, but I don't lose as fast. And if I can get a steady, nice, steady number of that right there, if I can keep that coming, you bet I'm going to be jumping all over that, because I think we are way too cavalier here in the cosmos and crypto in general. We are entirely too cavalier. About 97 damn percent. I want you to think about that for a second. 97%. Look at the SoFi ads you get. Look at the ones you get from Chase Bank. Look at the ones you get from a traditional bank. We will give you 0.75% interest. We will give you 0.75, guys. Give it up for 0.75% interest, because they're doing you such a big damn favor on that. This is 97%. All right, look at, there it is. You're seeing it for yourself. That's 97%. That is a lot of risk mitigation for me, simply due to the fact that only half this pool is exposed to volatility. But I know, regardless, tomorrow I'm going to be getting more of these. Now, how does this work? That's kind of the whole thing. How can they offer these kind of APRs? That's a whole different discussion, and I promise you I got videos breaking out all of this. I'm not going to talk about it here because we're kind of getting towards the end of the stream. But how can they do it, and why is this different than what FTX was doing? Why is this different than what BlockFi is doing? Why is this different? I promise you I break it out. But I'm confident enough in this based on the tokenomics, market, everything else, that I still am more than happy to keep this as the lion's share of my money. So when I do get my epoch and I get a little bit of Osmo, the Osmo, all of it directly goes straight into this pool right here. 1.8 of it, $2, not a big deal, not a lot of money. Not getting nuts here. I'm not changing the world with this. Doesn't matter. It's not the point. Point is scale. And again, with these two, with this wallet right here, we're all going to go through this together. So if you have any other questions or concerns going forward, I'm going to send you right back here to these videos. This is something I actually think it's a good idea. These are achievable numbers. These are manageable numbers for most people, probably most crypto people. So I'm not exactly concerned about the value. I'm not concerned about what it does or how it takes off, how it grows. I mean, I'm not flexing anything here, all right? It doesn't matter. You guys see it the same way I see it. So the other pool that I'm in here is Jackal Osmo. I'm in this one for a couple of good reasons. One, I know the product. Two, 744% APR. Three, I'm paired with Osmo. And four, it's running. It's running with the rest of the Cosmos right now. I love that. So this one here, all of the Jackal that I get out of this one goes right back into it. 16.6, $20. Not a lot, $20 a day. I get it. That's not a lot of money. But what it is, all things being equal, and meaning nothing changes on here, all things being equal, that $20 a day is $600 a month. $600 a month. Might not be a fortune, but that is $600 a month that you get, all things being equal, meaning that we don't have another black swan or Bitcoin at least kind of holds. $600 a month. That's real money. That is real money for an awful lot of people. And for what I can pull out of this, again, all things being equal, the APR is coming down, guys. Everything else is going down. Bitcoin's going nuts, so I'm not selling on it. But I can tell you that today, this very day, you saw with your own eyes, I earned $19.6 on this pool. It'll change. It always does. But over the next 30, 45 to 60 days, I will make more money out of that pool than I make out of anything else. I see the way that the token is running. I could not be happier about the way that this token is running, and the fact that the storage module isn't even up yet just reinforces my opinion. So I'm going to be doing that. All the Jackal goes right here. All the USDC Osmo goes here until I get to until I'm pulling $5 or $10 a day from that pool right there, in which case it's probably coming over here to Crescent, and let me show you why. I'm in farm, all right? I'm a farmer. That's it. It's what I do. I'm unapologetic. I am 100% a farmer. But they recently changed an APR on a pool over here that has me just absolutely jazzed. And in this case, it's being Atom and USDC Gravity Bridge. I want you to take a look at that. I want you to take a look at that number, and then I want you to consider for a minute the tokens that you're pairing with this. Atom, all right? You're pairing Atom with USDC Gravity Bridge. That's what you're doing, and you're being paid 101.5%. Gravity Bridge is pumping up this pool. They want more action. They want their tokens out there, and they are the ones that are incentivizing the hell out of this pool. At 101.01%, I will take all that you can give me on this because I love pairing those assets. I love getting really good APRs on Atom if I can do it, and I adore pairing it with a stable token if I can. So this one here is when we get these numbers up here and we start getting those things meaningful, we'll be shoving them over here to Atom USDC Gravity Bridge at 101%, and I just hope I can catch it. Crescent has got a lot of good things going for it for DEX. They have a big order book. I mean, the order book's fantastic. I don't know if you guys spend any time over here. I spend a lot of time over here. The order book that they have going on over here is fantastic. This is Central Exchange Tools. That's this. All right, that is this. This is Gemini. This is a central exchange, 100% central exchange. You see the orders, limits, price, quantities, buys, fills, everything. And then you come over here to Crescent and you see the same damn thing. All right, these are central exchange tools that are making their way out to the DeFi. I am absolutely thrilled with this. I'm a big fan of Crescent. I have a lot of it, and I will continue to put it to work because I believe in what they have going on over here. But again, the big takeaway for me on this one, oh, and there's no lock-in on the pools. I forgot to mention that. Yeah, you put your money in, you can take it out whenever the hell you want. There's absolutely no lock-in. There's a lot going on. That pool right there is like emotionally exciting to me right now, because of the assets that I'm pairing. So do I pair with stables? You bet your ass. But I want to pair good products with them. All right, that's the whole thing. Oh, look at there. One little refresh and down it goes. I'm sorry. Flip positions. This is why I try to, this is why I try to diversify. This is why I will put my money all over the place. I don't want to get wiped out because one little thing happened over on osmosis, and now I can no longer access my money. Anyway, guys, I have a bunch of phone calls coming in, man. I got to get to this stuff. I thank you for joining me today. If there's something else you'd like to see me doing, something else you want to see happening over here on this program, babe, I'm all ears, all right? I do this for you guys. So if you want me to change, and by the way, look, we have animated graphics. Leanson made those up for us. So Leanson, if you could take a look at it. If you like it the way it is, we will continue to use it. If you want to change it up, you know what it looks like on the screen. So you do you, bro. Scott at ThePodocasts.com. I answer any and all emails because I like to get emails. It's just fun seeing how everybody else is seeing the world right now. And until next time, if you could, please stay safe. Please be smart with your money. And don't forget to don't forget to tip your bell. We'll see you guys. Be good. We are dropping new videos and podcasts every Sunday, Tuesday, and Thursday. And be sure to look for us on Instagram, Twitter, and Parler at ThePodocasts. Also, visit our page at ThePodocasts.com, all one word, for all of our most current content.